Welcome to Chapter 5. So far this semester we have focused on service businesses. In other words, none of the companies that we had sold a product. They were consulting or something else along those lines that didn't have a tangible product. So now we're going to take those concepts that we've learned and expand those to include products. And specifically products that we purchase from somebody else and then turn around and sell. So we're not going to talk about anything that would have been made ourselves, just things that we bought from a manufacturer and are going to turn around and sell either to the public or to another merchandiser. And this is sort of a graphical representation so that you can compare what the income statement would look like and how that differs from a service company versus a merchandising company. So here we have a law firm, or it could be a plumber or anybody, and we've got revenue. Then we're going to, from that, subtract our expenses, and that's going to equal net income. When we get to a merchandising company, though, now we've got to take into consideration the cost of what we paid for the item that we're then selling. It's not simply an expense. It actually comes before we get to expenses, and then we subtract our expenses from what it's called gross profit to then get to our net income. So down here at the bottom we have a side-by-side of a service company on the left and a merchandiser on the right. And you can see that we've got these two additional accounts, cost of goods sold and gross profit, that don't exist with a service company. So the math works the same, but now we've just got this kind of intermediate piece sandwiched in between the sales and the net income. And notice here this is net sales, and we'll talk about what the difference is between net sales and revenue as we move on. The operating cycle for a merchandiser, it starts with the merchandise that we buy from wherever it is that we get it from. We then sell it to somebody else, we bill that person, we have to collect that money, and then we turn around and invest more money in merchandise. And so that's kind of the circular nature of a merchandising company. And this merchandising company is going to carry inventory. We're going to have, theoretically, unless it's our first month in business, chances are every month we don't completely sell out of the inventory that we buy. We're going to buy some inventory and we're going to hope that people buy it, but probably there's going to be some left over at the end of the month. And what's left over in our inventory at the end of the month constitutes our beginning inventory for the next month. In addition, we're probably going to buy some more inventory. So we've got our beginning inventory and any net purchases, basically anything new that we've bought to sell, and those two combined are what are called merchandise available for sale. In other words, this is what we have that we can theoretically turn around and sell to somebody else. The stuff we started the period with plus the additional merchandise we purchased to sell. Depending on whether or not we sell those items or we don't, depends on sort of which way you venture into from that stage. If we don't sell it, then it ends up in our ending inventory. If we do sell it, then that ends up in what's called cost of goods sold, and we subtract that from the income, and that's how we take into consideration the price we paid for those items that we sell. There are two different ways that we will track sales of merchandise. One is called the perpetual system, and the other is called the periodic system. The perpetual system is kind of the preferred way of doing it. It keeps all the inventory in real time. Once, for every sale that we make, we subtract the item out of our inventory. And so theoretically, we know in real time what our inventory count always is. Unlike the periodic system, where we don't bother to track the individual items we sell. We just collect money for sales, and then at the end of the period we go out in the warehouse and we count what's left. We know what we started with, we know what's left, and we figure we, must have sold the rest. And I'm actually gonna hop on to the next video to begin talking about the perpetual system.